And I do want to welcome onto the stage the moderator for this panel discussion, Alison Collier. Did I say your surname correct? Collier. Fantastic. Alison is the managing director of Endeavor, focusing on impact-driven professional with extensive experience in delivering value through identifying new areas for business growth and leading implementation, multinationals, startups, and turnarounds. So very, very honored and pleased to have Alison here. And while we have the chairs being brought on stage, I also want to welcome Brandon Mullen, who is on the panel. Brandon is the managing director at Secha Capital. Secha Capital is an early-stage impact private equity firm focused on Africa. The next panelist is Dhanyal Davidson. Dhanyal Davidson. Did I say that correct? Fantastic. Dhanyal is an associate partner at Goodwill Investments and an investment professional in the African early-stage venture capital space. And the next panelist is Bongani Sithole, who's the managing director and CSO at Founders Factory Africa, building and scaling 140 tech startups across Africa over the next 5 years. And our final panelist is Kamohelo Motaung, who is a venture capital analyst at Launch Africa, leading early stage investment fund. Very, very pleased to have you all here. Just grab the seat over here. Let me just turn this one slightly.
I got strict instructions from the tech team that it needed to face that angle. So maybe they want to reorient.
Is this angle fine?
Okay.
Perfect. Thank you so much.
So Oliver, thanks so much for those introductions. But one thing just to call out before we get into the discussion, and I always think it makes a huge difference, especially for the entrepreneurs in the room, to really understand the mandates that each of these VCs are speaking from. So you can hear their perspectives when they're talking about this topic that we're going to be focusing on today, the future of VC in Africa. So you've heard a brief introduction from Oliver on who's sitting here, but I just want to ask each of the panelists to just restate your name, your company, and then more importantly for the room, the mandate that your fund has. So let's start with you.
Sounds good. Thanks, Alison. Just quickly check on the volume. So my name is Brendan Mullen, co-founder and managing director of Secha Capital. We're now investing out of our second fund. It's a $50 million fund investing in Southern Africa. Now, I think we're going to be a little bit different. And actually, from what I think I understand, the spectrum here is quite nice. We're a little bit later stage. We actually like boring industries, boring companies, fast-moving consumer goods, agribusiness, healthcare, tech enabling, that can be modernized via technology and the implementation of such. So I often like to think that a lot of the portfolio companies of, especially the last two here, we leverage at our companies to kind of modernize these large, fragmented, enduringly profitable markets that can be consolidated.
Super, thanks.
Thanks, Alison. Brendan, so there's no such a thing as a boarding company, so I will take that back from you. My name is Dhanyal Davidson. I'm part of Goodwill Investments. We are a Dutch-founded impact VC that focuses on early-stage investments. And when we say early stage, we typically mean seed to Series A, investing anywhere from $500,000 US up to $5 million. We invest out of 3 offices, one in South Africa covering Southern Africa, one in Kenya, and one in Nigeria, each taking care of their own regions. And there is a bit of a specificity in our mandate around improving the livelihoods of the underserved or the base of the pyramid. We invest into fintech, logistics, agri, energy, and most recently into education.
Great. Over to you.
Great. Thank you. My name is Bongani Sithole. I'm the Managing Director of Founders Factory. Founders Factory is a venture development company. We are backed by some of the largest listed companies or corporates in Africa. We are Pan-African. Our focus is really across major markets. We invest in early stage businesses. We back founders with great ideas. We essentially do 2 things. We give founders cash and also hands-on support to essentially help them to co-create and build their businesses. We've got two programs. The first is really just building concepts from scratch, working with founders in the market. And the second is really finding businesses that are looking to scale. We bring them into our scale program and work with them for a 6-month period. But essentially, we support the businesses throughout the period up to exit, but really supporting early stage founders. So what we have seen is really just the ability to bring corporates and founders together in Africa is really what founders need today to really break that cycle of creating relationships and B2B sales in the market. So that's really what Founders Factory is here to solve for.
Thanks so much. And Kamo?
Thank you so much. My name is Kamohelo Motaung. I'm an analyst at Launch Africa Ventures. We are a leading seed Pan-African VC fund, investing into B2B and B2C early stage startups across Africa. And we primarily invest in scalable solutions with strong management teams. And our typical check size is about $250,000, capped at $300,000.
Okay, perfect. So then just to round off the introductions, myself, Alison, Collier, I head up the team from Endeavour in South Africa. And just a quick summary on the fund that we have. It's really a little bit different to the funds, or the rest of the funds that you've heard from. And I want to say very openly, our fund wouldn't exist if we didn't have individuals like you with the funds that you have in the market. So the Endeavour Fund, both globally and locally, it's a follow fund. So we go into these deals behind you guys as the lead investors. Endeavour is really here to drive the growth of the entrepreneurs who have got the biggest ideas, who are going to be scaling, one, to be market leading position in their local markets, but two, globally. And what we really look to support the entrepreneurs with when it comes to capital is finding the right strategic partner to lead the capital round, and then we'll come in behind you with a small check. So the check sizes that we write are anything up to $5 million globally. Locally here in South Africa, our smallest check size will be around the 1 million rand mark. So we start really small. And the deals that we get involved in is anything from pre-Series A through to Series D. So we just invest in all of the entrepreneurs who are part of our portfolio as Endeavour here in South Africa and globally. So I want to say it's great to see such a mix of VCs on the stage. To the entrepreneurs in the room, you've got some really good advisors that are going to be sharing their thoughts. But something that's really excited us, and we've seen in our fund, we've made 10 deals over the past year alone, that I want to say was twice what we had expected to make when we just launched our fund last year in February. I mean, the growth in the global VC market has been incredible over the past year. The growth in the African VC market has been, even more incredible. I mean, when we look at the numbers from the Partech report, it's 456% that the VC market in Africa grew in 2021 alone. I mean, the leaders in the African continent was Nigeria, South Africa, Kenya, and Egypt. So we're seeing a nice spread across the continent. But just starting with you, Brendan, what do you see as in this trend? And what's your view on the VC investments in Africa and where we're going to see most of the growth in this year?
Great, excellent question. And I think there's a few components to it. So starting with kind of the GP ecosystem. I think historically, at least, so maybe you can tell by my accent, I'm American, apologies, but when I got here 9 years ago, I think it was just VC was Series A or seed, and it just meant investing in tech and kind of growth, burn rate, equity. Now there's a lot of different stages, so and a lot of different instruments, and I think that's great. It's no longer just kind of tech as a horizontal. Increasingly, people are getting specialized as GPs. When I look at, there's a new fund in Ghana that's backed by pension funds, so that's new kind of LPs in the GP space. And then Secha, I can't announce it here, but on Monday we're announcing a co-investment with a large corporate venture capital arm into the food space, right? So not just kind of pure play tech. And then I think down the line, right now the narrative is fintech, which is fantastic. And I think increasingly global investors will recognize that that specific vertical, there can be others, there's other narratives. And I think that will most likely be energy as the next step. And really across, once again, the stages. So I think more capital is coming there.
Just something that I wanted to call out that you mentioned when you were speaking. And for us, I want to say all of us that are keen to grow the liquidity in the African continent, to see some of the pension funds coming in, and I know you called out, hey, we invest in the more boring space, pension funds are always more comfortable to invest in those type of assets first, and then they slowly move up or down the curve depending on how you define the curve. But it's really exciting to hear that more and more pension funds are saying, hey, actually the excess returns are there, that we've got enough risk appetite to take that step and make the move. So I want to say well done to you and your team for getting some of that movement to start happening, because it definitely benefits the rest of us that play at an earlier stage. So it's great, great trend.
Yeah, I agree. I think there's sometimes lessons we can take from other markets and others that we should ignore. And I think one of them is finding that institutional money is coming in here. And I know earlier seed stage, it's a little bit more difficult, but certainly we're seeing that in the conversations we've had. And then, I guess, still talking from a GP structural, the secondary market is getting deeper. We're seeing more institutional come in the secondary market. And I'm sure there's people in the audience who can speak more to that. And then just the final 2 points to continue down the spectrum in terms of the investors and in terms of the strategies of funds. I think where we will be ahead of other markets is it's increasingly diverse. I think gender lens and just more women on investment teams, so maybe this panel notwithstanding, but I know that our respective teams are rather diverse. And again, because the data is there. The more diverse, the younger your team is, the better. And then lastly, and this is maybe a little bit pitching our own book, what Secha utilizes is something called an operator investor. So when we invest, we second our high-powered talent into the small growing business for a year. And I know that there's more and more of these platform, operating partner, value-add teams coming to the continent. I think that's fantastic, because whether it's an investor operator, if you made a lot of money, and now you're an angel joining the companies that you invest in, or larger funds that actually have teams with that talent built in. And I think all these trends are positive.
Fantastic. Thanks so much. And then, Dhanyal, I just wanted to bring you in here in the conversation. One, that broader question on the future trends, but I think also with your fund having its roots in Netherlands, that market is far more mature than what we have in Africa. And so I think there are a lot of learnings that we can continue to learn from the larger, more mature markets, where there's a different risk appetite, deeper pockets, and then you're able to do more things than potentially some of the funds that are not linked with the larger markets.
Yes, so I think one of the things that startups often forget to consider is the fact that it's not just about a VC being able to enter and invest into your startup, but it's also about being able to exit within 5 to 7 years' time. And what that means is being able to sell to somebody else. If we think about last year, only about 30 of 54 African countries actually had a single investment in startups. And so we do expect actually to see more countries being invested into, so we can get closer to that 54 number and covering the whole continent. And what we would also want to see is more than just one deal within these markets. Yeah. As an example, in Namibia last year, we saw a deal by the name of Jabu. It's an attractive deal, but at the same time, getting it through your IC and convincing them that you can exit this opportunity in 5 years' time to another investor is not that easy at the moment. So we do expect more deals, more comfort around exit opportunities, and being able to invest in these new markets. I think at the same time, another thing we're seeing is a focus from many VCs on gender lens investing. It's something that has been, we've been struggling on the continent in terms of diversity, in terms of gender, in terms of the type of co-founders we invest into, in terms of the follow-ons that female founding teams get. There's a long way for us to go. And so there's a lot of investment from LPs into VCs that are managed by female founders, because they are statistically more likely to invest into female-founded startups as well. At the same time, outside of gender, we are seeing some problems with investments into expats. Specifically in Kenya, Nigeria is increasingly another market where we see this. And so we do expect to see a lot more commitment by both local VCs and offshore VCs to start investing more into local talent, as foreign investors start to see how much local context actually matters when you're solving local problems.
Oh, great. Thanks so much. And then I want to say, Bongani, just keen to hear your views, and with the way that your team works, especially with supporting building the businesses from an early stage. I think you've got a very different stage that you invest in compared to the rest of us.
Yeah, no, thank you for that. Couple of things as far as that question is concerned. Founders Factory as a business, we exist to essentially increase top of the funnel for VC market. We've identified when we started, if you look at the VC space in Africa for the last 5-10 years, there were really few businesses who were deciding to take a risk of going to the grassroots level and really building with founders on the ground with an idea of increasing top of the funnel and de-risking these businesses. So our model is really twofold, where one is we look for founders on the market, we work with them, we essentially de-risk any challenges of their businesses to essentially increase the investability of these businesses. What we are hoping for, and I think it's great as you're raising the question of like about 8 billion flowing into the continent for investment and increasing the VC market. Our point of view is that we're hoping that in the next decade or so, the market can really change so that we can start to see a flywheel being created in the market where we're starting to see a lot of exits and these founders coming back to become angels and investing in early stage businesses to start to create a flywheel. When you talk about 8 billion VC market, where's that money coming from? If we can be able to build an ecosystem that can start to invest and build itself, I think that is where we want to get to. And I think the likes of Founders Factory and Bootcamp, Startup Bootcamp, we're looking to invest at this early stage so that we can increase the investability in the market, so that in the next 5 to 7 years, as you said, we can start to see returns. Right? The way to increase a speed to exit is really to work with founders and really hands-on experience to essentially de-risk these businesses so that you can make sure that in the next 5 to 7 years, you're increasing the likelihood of these businesses to exit. Yeah. So that's really why we exist.
And if we build great businesses, there's always a buyer.
Yeah. Of course.
So then, onto you, Camo. I mean, I think you're one of the most active investors in Africa over the past year. I want to say congratulations to you and your team. It's exceptional. You guys are forging a path for all of us. Very impressive. So we'd love to hear your thoughts on how you see things unfolding in the upcoming years for the African continent.
Awesome. And I tend to agree with Dhanyal's point around frontier markets, right? Sorry, can you hear me?
Yeah.
Cool. Around frontier markets, right? So yes, in absolute terms, the big four is SA, Kenya, Egypt, Nigeria, right? But I think there was an interesting study that was done by Max Collier from The Big Deal that looked into the data a bit more, right? And what essentially he did was to look at funding on a per capita basis, right? So when you break it down to that level, South Africa is first, but the second is Senegal, right? And although a lot of that was because of Wave's massive $200 million Series A last year, but it does indicate that there's indicators that a lot more capital is driving through to those markets, right? And as Launch Africa, we're positioning ourselves at the frontier of that. We've made 14 investments over the last 18 months within Francophone Africa alone, right? And recently in our last IC, we've approved an investment to Morocco as well as Tunisia. So I see the drive into geographies that weren't otherwise invested in by investors prior to launch.
I think that's a very interesting point, and it leads into the second question that I'd love for our panel to discuss. And that's talking about the rise of mega deals and valuations. And I mean, I want to say, I think, not to be too general, to make too much of a general comment, but we've, with the international capital that's come into Africa, I want to say the easiest thing to do when you're sitting internationally is to look at it from a macro perspective, to look at where are the big four markets. Okay, there are the big four markets. Who are the players that are playing in fintech in that space? Who are the players that are playing in, you can call it energy or whatever your next view is on the macro sector by sector, and then write enormous checks. Okay, so we've seen pricing and valuations do very interesting things in certain markets, but I think your point, Camo, that you make is that there are many other markets. They're not just those four, and there are very interesting things happening in those markets. So my second question is really talking to that point. How do you see geographically VC evolving and the VC investor base and liquidity evolving across the African continent? So I think we'll stick to the same order. It worked quite well. So Brendan, first to you.
Yeah, this is a tougher one, I think, and a great question. It's a double-edged sword. It's great to see money coming in from outside. Of course, the the rents in the system will also leave. They'll go back to the US and Europe if that's where the LPs and the GPs are sitting. I'm excited. I think net, these valuations are very good, right? We should be happy. Again, not particularly our space, so maybe it's easy for me to say this from the sidelines. And that is wonderful. The concern is that there's only room for one narrative. And if there are some failures, then it's, hey, we burned our fingers again on this continent. And I don't think that's particularly fair. I'm not sure that will happen because some of these investments are largely winner-take-all spaces, so there will be a lot of losers, and let's keep that in mind. But I think along with that will be a diversity of investors, a diversity of strategies, and I think that'll net out in the right area. I think this is a nice entry point for some investors that wouldn't have considered this before. And once you get those large numbers, even, obviously I think everybody on the stage, I would assume you hate kind of adding up the continent of Africa. Anytime you see a report that adds up those populations, you just don't read it because it's different countries, different regions. But yeah, I think it'll shake out in a good way going forward and be net positive for the continent. I just want to make sure that we celebrate the winners because I think it will be a narrative game. And I know we already have some, but let's make sure we focus on that and not kind of allow a narrative to come through of, hey, we tried an emerging market, it didn't work, because then it'll be another 10-year cycle until it's kind of the opportunity again.
No, I want to say great point, and just over to you, Dhanyal, and just to hear, these discussions that happen at all of our ICs, where we're looking at the valuation, we're looking at the multiple, it's radically different from what it was 2 years ago. Just very curious to know, one, just on the broader question, what your response is, and then two, just, practically, what's your team's strategy and approach now that this has shifted?
Yeah, I think it's worth taking a step back and maybe first asking ourselves, why are we seeing mega rounds on the continent? Yeah. I think the first thing is, of course, we are seeing a lot of later stage and more mature businesses now, given that the ecosystem is maturing. And then I think that there are really three contributing factors. One is the fact that talent is becoming a lot more expensive. If you think about a market like South Africa and the entrants like AWS soaking up development talent, it's becoming increasingly expensive for you to actually get developers to come in and work at your startup. Because of that, you need to raise more money. At the same time, as companies mature and are getting bigger, you are looking for acquisitive growth. Can I acquire somebody in a new market? Can I acquire somebody in a new product space so that I can add to my growth? And in that way, I need to fund these acquisitions and raise more money. And the third one, and many of you in the investor space would hear this, is when people talk about land grabs. And that's about Africa's out there. It's an opportunity you can get to. Just fund as much as possible and take what you can get before anybody comes inside. And I think that how we think about it is Africa in itself, if you think of the ecosystem as a startup, at the moment there's a lot of hype around it, and we do think that there's some overinflation and exuberance in sectors like fintech, and so actually I've taken a decision to avoid fintech at the moment. So increasingly we try to see how we can actually look for deals where instead of going into fintech or instead of going into core markets, we can go into a Zambia and that company can expand into a South Africa, but because we're investing first in Zambia, we can get in cheaper, or we invest in an agriculture startup that's priced cheaper than fintech, and we embed financial services into that startup, like credit or insurance. And in that way, we can actually push the multiple up over time. So we're avoiding fintech, we're looking at other sectors, we're looking at other geographies and looking for deals in those spaces.
But I want to say, I think that's great. And then, for the entrepreneurs, there's a very different way to grow now than what there was 2 years ago. Like underlying both the comments that you've heard today, there are other businesses that are out there that are big enough to partner with, to buy, or you can exit to those businesses. And that's really different. If you wind back the clock 5 years or 10 years in Africa, that was not the continent, or that wasn't the space that we were playing in. You had to build everything yourself, which meant you needed to raise an exceptional amount of cash and then take a long time building out all the different pieces yourself. We're very fortunate. The growth curve can look really different now. The pace is different. It just means we need to have a different approach with how we grow. So Founders Factory, your perspective.
Yeah, I think it's a really good question. So Founders Factory, the way we operate, we have a team of expertise in-house across growth, investments, partnerships, and engineering. And the way we think of ourselves is how can we expand into new geographies to essentially work with new markets and new founders in these new geographies. And we believe two things need to happen in the VC space. One, the ability for programs like ourselves to expand into Senegal, Egypt, and some of these, Morocco, etc., to be able to build on the ground with the founders. But the second thing is that I think Africa needs to think about how to increase the angel investments, right? Because if you look at North America today, it's sitting at over 3 billion angel investment ticket size, right? So it means that if you can have a large ticket size at the grassroots level, you then have the opportunity to essentially increase the ecosystem and invest into new markets. So if you look at what we're doing at the moment, investing into agriculture, right? We believe that food security in Africa is going to be a huge thing. And the ability for us to essentially build into that vertical and de-risk some of these businesses to essentially secure the future is what Africa needs to look into. And I agree with Dhanyal when he's saying we need to start to look at different verticals where there's no overinflation. And I think agriculture is one of those and few others. And that's where Founders Factory, we're starting to think about beyond the three verticals that we're in at the moment, which is agriculture, fintech, and health. What else can we invest into in other markets so that we can start to bring a balance in the ecosystem, and also creating an appetite for early stage investors, angels, so that we can increase those ticket sizes, so that they can believe that if Founders Factory is in a completely rural and remote area, as long as they're there and building with founders, we are happy to put in our cash there to start to bring a balance in the ecosystem.
No, great. And I want to say to have, a rounded ecosystem where you've got many verticals that are performing well. What does that mean? It means that all the verticals actually perform better because they all feed off each other
100%.
Through the economy. So and drive the overall liquidity, which will then mean that there's more of an exit opportunity, which is helpful for everyone. So then launch Africa. So Kamo. So you alluded to this already in your first comment, but curious to see how you guys are thinking about the next 2 or 3 years from your fund's perspective, given what you're expecting to see, not just in the big four markets, but across the many other markets sitting in Africa, as well as the verticals, and just how you're thinking about this.
So I'm going to answer the first question relating to...
yeah, you just have to speak up. I think your mic stopped working.
I'm going to answer the first question relating to where the mega deals and valuations, etc., because the answer sort of ties into that.
Great.
Right? And I think it's just a function of where this ecosystem is on its growth trajectory, right? So Dhanyal mentioned that ecosystems are like startups, right? And they grow through 3 phases: experimentation, scaling, and liquidity, right? And in a nascent ecosystem, there's little to no investments. The contours of the market are unclear, and there isn't that much activity. And entrepreneurs are copying business models from developed markets, right? And they lack a local context. And as the ecosystem grows, adapts, and develops, so do the entrepreneurs and the sophistication of the investors coming in, right? And that's when you see global players start to come in. In January, we saw A16Z announce their first investment in Africa, which gives signs to say that we are coming out of that experimentation phase into the scaling phase, right? Yep. So like startups, ecosystems develop gradually, then suddenly. And it's just the beginning for Africa. So as Launch Africa, we've at the position where nearing the end of the life of our investment cycle, and we're going to be doing more drives towards the liquidity as we're in the scaling bit of the ecosystem development curve.
No, and it's interesting that you mentioned that. I mean, really, just if we look, I can just speak to the entrepreneurs that we work with. So here in South Africa, we work with about 100. 30 of those are well above the 100 million rand mark, just to put it in context. And then across Africa, we, as Endeavour, we've got offices in 5 different places. What's been fascinating to see is the amount of entrepreneurs in the last year alone from the rest of Africa that have joined our portfolio here in South Africa. And that's because of this growth factor that you're talking about, that the markets are maturing and those businesses are growing in Ivory Coast and now expanding here in South Africa. Similarly, businesses in Namibia and Zambia are doing the same thing. And it's really, really great to see, because I think that the overall liquidity across between the countries and between the markets will be exponential. And then over and above that, the partnerships that we're seeing, one, within the fintech space, but I think two, more importantly, what you call out in the agricultural space, we are seeing so many partnerships happening between fintech or payment businesses together with a marketplace or logistics businesses. The same thing exactly, like an ag tech business or a health tech business that then starts embedding financial services. And I want to say, when you start putting businesses like that together, the growth becomes incredible.
Yeah.
And it's really wonderful that as a continent, that we're starting to really accelerate the overall ecosystem in the startup space. And I think we can see, or we know what the growth trajectory looked like in LATAM. We can learn from that. And so Africa's, I'm convinced it will be faster because we've got other continents to learn from. Both tech and then also, very practical learnings, the entrepreneurs who've been before us and investors. But so from this, I wanted to move on to, ask the floor if there are any questions. So.
We have about 5 minutes for this, so if we can get maybe 2 questions at most, we can try to keep the questions and the answers brief for a little while. But can we get a microphone over here? This gentleman raised his hand, and that gentleman over there.
Is that working? Brilliant.
Sorry, man. Do you mind just standing up for us?
No problem. Lady and gents, thank you. Very insightful. I've got a question more on the actual structure of VC itself. So, structure of funds, deployment. We've seen this massive influx of cash coming to the continent, and long may it continue. But with that shift comes this global trend of Sequoia changing the way they structure their funds, and the traditional 2 and 20 model, actually setting up a fund on the continent moving forward and re-raising from new LPs, be it individuals, super angels, pension funds, whatever. Where do you see the actual structure of VC going in the next couple of years? Are we writing smaller, more frequent checks? How are we returning funds to LPs? Those sorts of things, as opposed to just, let's keep raising bigger funds and writing bigger checks. Thanks.
Just a question for you. Have you got a specific person on the panel that you're directing that to, or is that just general?
It's general, Alison, because I think they're all coming from different perspectives.
Okay,
but,
so who wants to give a go? Okay, Dhanyal, over to you.
So at the moment, we are busy raising our 5th fund. So within this context you're speaking about at the moment. And I would say that on the side of LPs and who we are attracting money from, traditionally we've raised money largely from wealthy individuals, but wealthy individuals can only get you to a certain fund size. In this fund, we're hoping to get to about 150 million euro, and to get there, we have to be focusing on your DFIs as well. Your institutionals, like your insurance companies, will also look at them, and also pension funds. So we are increasingly look at more institutionalized LPs, but at the same time, those institutions are coming with new requirements, such as, what's the gender diversity within your team, what's the gender diversity within the startups you will invest into, and more of a focus on diversity, both within gender and then in terms of having local startup founders who you are funding. In terms of the type of investments we're looking at, we aren't looking really to change the type of stage or the type of checks we do. One of the conversations we are having is, do we need to deploy capital faster? If you speak to somebody like a Launch Africa Ventures, you can imagine how fast they are going through a DD and getting capital into the hands of founders. Offshore investors are also doing this quite fast, and we need to think about, can we actually increase the speed of our own DD and time to disbursement? And then I think the final point is this topic about fees. And you spoke about the 2 and 20 model. There is an increasing push from LPs to actually fund the VCs that are charging less than 2%. Okay, so you have less of a hands-on approach. You're typically not leading rounds, and so because of that, you can have a lighter team. Okay, we haven't opted for that approach. You will still need leads within rounds to bring along those co-investors, and also leads are the ones playing that active role, providing hands-on support, and are typically the ones getting access to secondary shares on offer, new rounds, preferential pricing, board seats, and that's the space that we would like to play.
Can I add just one more point?
Yes,
there?
go for it.
Yeah, I think from our side, what we're starting to see it's a mix of returns and impact from most of the VCs, and there is this question of what impact means in the context of Africa. And that really increases the speed to investment. So which means that we're going to need a lot more of smaller ticket size because of the need on the market to increase the likelihood of more businesses, investable business in the continent. So speed to investment is far more important, and as such increasing the impact and also building through to exits from a returns point of view. So we're seeing those mix of impact and return from our side.
Very interesting. And I'm very curious to hear your view, Brendan, because it comes from a different angle.
Yeah, well, so our first fund was a 12J, which we don't need to go into the details, but it's tax break generally for high net worth South Africans, the corporates as well. And so our LP base in the end is going to be totally different from Fund 1 and Fund 2. And with that, money is structural, right? So the DFIs are great. They can write big checks, but yes, they have a lot of requirements. They need your fund size to be usually larger than you want to. So you can't write that smaller check. Now I'm talking maybe not seed stage. I'm kind of talking even small cap PE here. So it really does matter. So I guess what I would want, like one, the 12J to come back, even though we don't plan to use it again. I thought it was phenomenal. It's a whole nother discussion. I think Kalon was here. I think that was their first fund as well. Number two, I do wish the DFIs didn't require such a large fund size because I think that does kind of grow that missing middle. And then number three, we really need to push for a more robust, formalized kind of LP base via family offices, multifamily offices, pension funds, and endowments on this continent. Because it's really hard to crack that knowledge base in the US and Europe.
Well, listen, we're counting on teams like yours to do that for us. So come on. Huh? No, but really to the point, I mean, so Zach, I'm going to hand the mic over to you for a question, but it's really important to look to what the DFIs are asking for. And I think most of the answer to your question lies there because they've got very big checks. Yeah. Okay, Zach. Okay, we're out of time, but Zach, the floor is yours and we'll respond.
Just an additional thought to the fund structure point that if I may, is the 220 model you could argue is broken, but the problem is a lot of VCs aren't leading deals, and I fully agree. If you're leading a deal and doing most of the DD, you should be able to charge higher fees and higher carry. If you're a follower fund or a co-investor, you shouldn't be charging 2%. I think that model really needs to be relooked at. And the second thing is, most VC funds never return capital. Forget about hurdle. So we all love the Sequoias and then the Andreessen Horowitzes, but there are 95 others for every one that we never hear of. So if you look at the US structure, a lot of funds that are good funds have deal-by-deal carry. So the GPs are more incentivized to look at good deals, whereas the European model, and you could argue by extension the Asian and African model, is not deal-by-deal carry. So GPs have to wait till year 9 or sometimes year 12 to even see a single dollar of return. And you don't make a lot of money on a $100 million VC fund or a $50 million VC fund. You'd rather be banking at, down the road at Standard Bank. So that needs to change, right? And I think it is happening from a structuring perspective. The one thing I wanted to add, or question rather, is we had a chat yesterday about what founders really need outside of just equity capital. There needs to be a structure where VC funds will have sub-funds that do revenue-based financing, debt-based financing, asset financing, because not all founders need the same capital. So VC funds need to get a little more imaginative in how they have sub-funds that meet what their founders actually need. Then you can be creative around your fee structures. So, and LPs, smart LPs would be open to that.
Smart, exactly, and I think that's the point. It's like you've got to find those right LPs to get in your fund, to be creative, and then just know the DFIs. I want to say we love them. They're right, they've got enormously deep pockets, but find it more difficult to be nimble. And we just need to realize, what the different spaces are that these different LPs play in, and then, what our funds are trying to do, and then make a good match to really support the entrepreneur's growth. Because, the VC funds are only going to work when we are investing in and supporting building great entrepreneurs. Anyway, but thank you very much to the panel. I mean, I'm very excited to see the growth continuing in this year in the VC space, one here in South Africa, but 2 across the continent. And I want to say long may it continue. So well done, everyone. Okay, thanks so much.
Fantastic. Can we give a big round of applause to our panel? Can we just pose for a photo?